Passing your real estate exam means understanding the ins and outs of a real estate transaction. One crucial aspect is the closing process. This involves a lot of numbers. Mastering closing calculations is essential for your exam success. These calculations determine the final costs for buyers and sellers. They include mortgage payments, closing costs, and prorated items. Without a firm grasp of these calculations, you won't be able to confidently answer exam questions. Understanding these concepts will not only help you pass the exam but also prepare you for real-world scenarios. Let's break down one of the most important calculations, the monthly mortgage payment. This payment is often referred to as PITI. PITI stands for principal, interest, taxes, and insurance. The principal is the amount of money you borrow. Interest is what the lender charges you for borrowing the money. Property taxes are paid to the local government. Homeowners Insurance protects your investment. To calculate the monthly mortgage payment, you'll use the loan amortization formula. This formula factors in the loan amount, interest rate, and loan term. Don't let the formula intimidate you. Break it down step by step. Use practical examples to understand how each element impacts the final payment. Remember, practice makes perfect. For sellers, knowing their net proceeds is crucial. This figure represents the money they receive from the sale after all expenses are paid. Calculating net proceeds involves subtracting various costs from the sale price. These costs include the remaining mortgage balance, real estate agent commissions, and other closing costs. Agent commissions are typically a percentage of the sale price. Closing costs can encompass various fees, such as attorney fees, title insurance, and recording fees. By accurately calculating these deductions, you can determine the seller's final takeaway. Understanding this calculation is essential for both the exam and real-life applications. Prorated items often cause confusion, but they don't have to. These are shared expenses between the buyer and seller. They are adjusted based on the closing date. Common prorated items include property taxes, homeowners insurance, and utilities. For instance, if the seller prepaid the property taxes for the year, the buyer will need to reimburse them for the portion covering the period after closing. Calculating prorated items involves determining the daily cost and multiplying it by the number of days each party is responsible for. Mastering these calculations ensures a fair division of expenses. Section 5. Navigating transfer taxes and recording fees. Transfer taxes and recording fees are unavoidable expenses in a real estate transaction. Transfer taxes are imposed by local or state governments on the transfer of property ownership. These taxes are usually based on a percentage of the sale price. Recording fees are paid to the local government for recording the deed, which officially transfers ownership from the seller to the buyer. These fees vary depending on the jurisdiction. Understanding these fees and how they are calculated is essential for accurate closing cost estimations. Section 6. Debits and credits. Balancing the books at closing. The closing process involves a detailed accounting of all financial aspects of the transaction. This is where debits and credits come into play. Debits represent charges to the buyer or seller. Credits are amounts paid or credited to them. For example, the sale price is a credit to the seller, while the loan amount is a debit to the buyer. Understanding debits and credits is crucial for reconciling all expenses and payments at closing. This ensures both parties are treated fairly and all financial obligations are met. Section 7. Common pitfalls to avoid in closing calculations. Even with careful attention, mistakes can happen. Be aware of common pitfalls in closing calculations. One common error is miscalculating the prorated amounts. Another is forgetting to include all applicable closing costs such as loan origination fees or title insurance. Double-checking your work and using checklists can help avoid these errors. It's also crucial to stay updated on any changes in local regulations or fee structures. Accuracy is paramount in real estate transactions, and avoiding these missteps ensures a smoother closing process. Section 8. Essential tips for exam preparation. Now that you have a good grasp of the key calculations, let's focus on exam preparation. Practice makes perfect. Work through numerous practice problems using realistic scenarios. This will help you familiarize yourself with different calculation types and boost your confidence. Use visual aids like flashcards and diagrams to memorize formulas and key concepts. Remember, the exam is not just about memorizing formulas, it's about understanding the concepts behind them and applying them accurately. Section 9. Mastering closing calculations, your key to success. Mastering closing calculations is a significant step towards conquering your real estate exam. By understanding these concepts, you demonstrate your competency in a crucial area of real estate. This knowledge will not only help you pass the exam but also equip you with essential skills for your future career. Remember, consistent practice, attention to detail, and a thorough understanding of the concepts are your keys to success.